Hello everyone and welcome back. My name is Greg Furman and these are the market positions for August the 29th, 2017. Now our first trade for this week is going to be very similar to last week. We started last week buying Euro US down around that 117.50 area last week, which has turned into a fantastic trade as it's now closed up in this 119.78 area, but that doesn't mean we can't keep buying this, guys. Now you can see that the last VantagePoint triple EMA cross led to a significant move to the upside, a great call from VantagePoint from 111 all the way up to 119. We then stalled and we've been going sideways here now for about the last 3 weeks, but the VantagePoint indicators have told us to remain long. We've held above the 40 line on the predicted RSI, our predicted MACD firmly above the 0 line. Our neural index has gone up and down with intraday volatility, but predominantly the primary indicators are telling us that the euro is going higher and the US dollar is likely going lower. Now we have a fresh crossover on our predicted MACD. Our predicted short, medium, and long-term differences and our strength indicator are actually not overbought. Now we are getting a little bit overbought on our predicted RSI, but that doesn't mean we can't continue buying. In all likelihood, 119 is probably now a base for the euro as it tries to extend and reach a new top. Now our downside pivot area is 117.98. All stops should be below that area. Our pivot areas to buy from are between 119.16 and 118.42. with again a strong bias for further upside. Now as we clear this off, we want to look at those individual crossovers. I can pretty much tell you they're all looking quite good. Short term is excellent, medium term is great, and so is our long term. Our long term only are a couple of days old here. So when we look at it over the last year here, we go back from 1 year, the euro has had a very good year in 2017 so far, so it looks like this is going to continue. Now from here, all we have to do is then go into that all-important daily report to fine-tune our entry points for tomorrow. Now again, I talked about those pivot areas, 119.16 through 118.42. So when we look at tomorrow's pullback, we're 119.19, which is that 3-day predicted moving average from VantagePoint. That's the level right around anywhere near that area we want to look to buy from. Now we have further volatility coming into the market. It's my understanding again that North Korea has fired a missile towards or over Japan. Not sure yet, and I do want to remind everybody this video is being produced at about 6:15 p.m. Eastern Standard Time on Monday for Tuesday trade ahead of the market before the Asian session opens. So we want to take this into consideration now with North Korea up to further nonsense here. That is likely going to weaken the equities, and that will actually further boost the euro. Now our second trade for tonight is very highly correlated to the Forex market, the Euro-US pair, the US-Japan more specifically. Now with this further conflict with North Korea, we are unlikely to see any big gains in the equity markets. The equities, meaning the S&P 500, the Dow, the Russell, the Nasdaq, they are likely to come under pressure. Now our critical 18-day predicted moving average on the ProShares Short QQQs is 38.95. We're closing 39.04. Now we're holding right along this VantagePoint 18-day predicted moving average. Our neural index is back to the upside. Our predicted differences are very mixed around the 0 line, but you can see the predicted MACD is getting ready to yet again challenge the 0 line. Now when we break above the 0 line or when we break below the 0 line, as you can see here with the triple EMA cross, that leads to a very substantial move in the markets here, followed by the predicted RSI. So in this particular case, our predicted RSI is remaining sideways, but it's holding right around the 50 level. So this tells me with this new event risk coming into the market, it is likely to be a significant negative for the equity market. So we want to bet that the equities are going lower. Now, our short-term crossover is sideways, medium term is to the upside, and our long-term crossover is to the upside with a lot of activity around this 38.99 area. So when we look at this, we are betting that the global equity markets are going lower. With that close of 39.04 for tomorrow, we're looking for a minor pullback to 38.73. We are then going to target 39.28. Now that's on the initial move, but if we get a big move on these equity markets, we shouldn't have too much trouble moving back towards this current range top, which currently comes in at or about the $41 per share mark. So potentially some very good short to medium term opportunity by betting against the equity markets going higher. Now, when we're looking at stops here, guys, we want to make sure that all stops are below our most recent demand area, which is 38.50. So keep all of your stops down below 38.50. I would just say $38 per share. Keep your stops below there and look for a bigger target in the medium to longer term, potentially again back up to $41 per share. Or if we look at this over the last 6 months, we were at $43 per share. So not a bad looking short-term trade, but potentially an even better medium to longer term trade.